Not sure why my mic just went muted there. It just gave me an alert, said that we were muted. Sorry about that. But we had our broadcast last Thursday, and I said we'll be back for normal time, Market Monday. So always 6 p.m. right here, Market Monday. Today, diving into something really crucial I think everybody's going to want to hear about. Spent 2 days in Tampa this weekend helping new students understand what it's like to trade stocks with a system. A system is a simple set of habits, a simple set of rules that we bring in to help us make sense of what otherwise doesn't make sense. Say that even more simple is we taught them how to stock trade. When do I get in? When do I get out? What do I do in between? That comes from a system. I'm going to show you two things today, simple things from the system on how to avoid bad trades. We're also going to define bad trades as well. It's not what a lot of people might immediately think makes a bad trade. And I think actually for some of you guys who are actively trading already, I hope that this releases you, right? Frees you from maybe some pressure, okay, in your trading. And if you've been trading at all, you know less pressure, way better. Susan, I say hi to you as well. Good to see you. We'll be in and out due to home issues. That's okay. That's okay, Susan. If you're joining us today, you want to drop your name in the comment box. Let me know who you are, where you're from, what you're doing in the market, right? If you're active in the market at all, or if you're just looking, you're excited, you're interested, you're joining us, you don't know anything, totally fine by me. I tell people all the time, if you know nothing, then you're at where I was at when I started in the winter of 2016, okay? So you guys can definitely know that you're in the right place. You are in the right place. 2 ways to avoid bad trades. Let me define this for a second. Avoiding bad trades means avoiding putting my money in the market in a place that is more likely to lose than it is to win. Who doesn't want to know that? Now, these are only 2 ways. These aren't all the ways I can show you. These are 2 ways I can show you how to avoid bad trades. I put my money in the market and it is less likely that I'm going to make anything than it is likely that I'm going to make something. You say, Blair, I would be very interested in knowing how to avoid putting my money in a less likely trade. That would be true for both of us, right? Karen says, hey, Blair, watching some stocks, right? Taking a look, but not trading, okay? So not currently in a trade, but actively doing some trading, okay? Getting you going. That's amazing. That's great. That's what we want. You know, somebody said that mistakes are the environment of learning, right? Practicing, getting involved. I say this about health coaching. We don't change the body overnight. We can't change the body overnight, but we can change the direction in a moment. It's true of our financial health as well. And trading stocks can be a huge boost, right? It has that potential. And so, Karen, thank you for that. Watching some stocks, not trading right now, but headed in the right direction, right? Moving forward. Anybody else out there? This is off the notes, but I've been thinking and feeling this a lot lately. And I certainly did with our friends in Tampa. We had 200 plus people in our class in Tampa this past weekend. You know, the world is always changing. But the world is changing at a tremendously fast rate. And it has been for some time. Change has always been happening, but the rate of change is getting faster and faster and faster. And the things we thought wouldn't change are changing faster than we thought they would change. It's all changing. I'm telling you, trading stocks, trading in the stock market, understanding how this stuff works is a huge asset in today's economy. So really excited to have you guys on here and getting involved. 2 ways to avoid bad trades, okay? Let me start here. What's the number 1 rule in trading, okay? I would say there's a couple of ties here at the number one slot. But for any trader, the number one rule comes from this. I've said this on here before. Amateurs chase profit. Professionals manage what? Professionals manage risk. Okay? Professionals manage risk. Now, I've said that many times. So what's one of the number one rules to trading? It comes from that statement. Protect your capital. Protect your account. Amateurs expose their capital. They take wild risks. They gamble. They guess. They go for it because the sense of the profit I could make is big enough, strong enough, magnetic enough to pull us into a position, a play, or what we call a trade, right? We call that a position or a play at different times, right? Same thing though. It's a trade. That pulls them in. It's enough. Well, look what I could do. I thought it was going to go up. So one of the number one things that shifts us from that immaturity with our money in the market to maturity in the market is to say, no, the number one thing that I'm going to do is protect my money. Because the only way you can make money in the market is if you have some, right? If we don't have any, we can't make any. And if we keep giving it away, then we're not going to have any left to trade, right? If we have a trading business, the lifeblood of that trading business, right, is capital. It's capital. It's your money. So we can talk about how you and I, we don't want to lose any hard-earned money that we've put into our trading account, right? Of course, that's true. We don't want to lose that. But we know we have to take risk with it. We cannot make a return unless we take some risk. But that said, we want to know what are good risks and what are bad risks, okay? So we have to protect our capital. There are many ways to do that. I said this wasn't going to be exhaustive. These are two main ways to avoid bad trades. But these are so key because one of the number one jobs we have is to protect the capital. And it's important to make that distinction because it's very easy for us, especially when we're new, to think that the number one focus is profit. And that is a big part of trading. But the interesting thing is that the path to profit is actually protection. Right? Now, some of us are more conservative than others, but the path to profit is protecting the capital because if we just take wild risks and we lose all our money, it doesn't matter. It doesn't matter if we had a few winning trades because it'll be gone. And that's what we don't want to do. So moving into maturity is I'm going to learn how to protect my money. Not just how to chase money. I'm going to learn how to protect it. I'm going to give you two ways to do that today. We talk about many more in our program. I'm going to give you two today. So that's the first thing I want to define before we get going. The second thing I want to define before I tell you what these two things are is bad trade. I'm saying two ways to avoid bad trades, but we need to define, well, what is a bad trade? Okay, what's a bad trade? Because what a lot of people think might be a bad trade is not necessarily a bad trade. So let's define that, okay? Let's define that. How many of us think that a stock trade that doesn't make any money is a bad trade? Okay? A stock trade that doesn't make any money, is that a bad trade? Does that have to be a bad trade? Now, I know there's some delay on the comments. Some of you guys are going to be joining us by recording. Many of you usually do. So a trade that loses money is not necessarily a bad trade, because in the stock market, you can apply the system. The best stock traders in the world, the most professional, profitable stock traders in the world lose money in trades. That doesn't mean it's a bad trade. Karen says, not necessarily. Karen, you are correct, right? Not necessarily. Now, that is important. Remember I said I want to lessen some of the pressure. If you've lost money in a trade, that does not necessarily mean you took on a bad trade, right? Because you can do what you are supposed to do as a trader, right? Let's say you go through the program, go through the Tradeway program. Blair, I go through the Tradeway program. Am I going to lose any money in the market? Yes. If you actively trade, you will lose money in the market. Everybody who trades in the market loses money in the market. The difference is if you have the skill sets, right? If you have the skill sets of a trader, then over time, even though you've lost some money, you can be profitable so that you've actually made more than what you've lost. Some trades are going to lose though, right? Some trades are going to lose. The system over time puts the math in our favor, right? We have to know how to use it properly, but that is what a system does. That is what we teach. So it's important that a bad trade is not necessarily just because it lost money. And I say this, I hear students say, oh man, yeah, it was a bad trade. I'm sorry. They're maybe showing it to me as a coach. And I'll look at it and go, no, that's not a bad trade. You did close to or everything or just about everything right. But you know what we can't control? The market. Can't control the market. You can't control it. But you're doing it right. Keep doing that over time. That's how we get the math in our favor. So it's very important. So hopefully that lifts some of the pressure for you guys. If you're one of the high self-critical people out there, oh man, I should never lose. No, that's not going to help you as a trader because it's not realistic. Now we want to lose small, win big, right? And that's what we teach you how to do in the program. So that is not necessarily a bad trade, but there are bad trades. That's not the definition of a bad trade, but there are bad trades. And now I'm going to show you two of them because if we know what they are, then we can avoid them, okay? We want to teach you how to have good trades. Good trades can make money. Good trades can lose money. Over time, you and I can get ahead, but we've got to apply things correctly, okay? We talk about all of this in our very first class, our step 1, start your journey. You go to tradeway.com on the main page, sign up for the virtual class. You can learn all of this stuff, okay? This is a 2-day class we do this in. There's no way we can do this all in a Market Monday session, but that's where you can learn the system. That's where we teach you to learn to have good trades. Okay, so here's an introduction to 2 ways to avoid bad trades. Here's number 1. You and I can avoid bad trades by having a trading plan before entering into any trade. Having a basic trading plan. I'll tell you what a bad trade is. A bad trade is having zero plan before entering into the trade. Amateurs do not know and don't care even about making a trading plan. They don't know how to make a trading plan. They don't know what a trading plan is, right? We got to learn that. We got to have a plan because I said earlier, the market's going to do what the market is going to do. But do you know what you are going to do? Because you can't control the market. You can only control you. This is like defensive driving. If anybody out there is taking defensive driving, right? You don't know what the other drivers are going to do. So you have to know how to drive in a way that is defensive, right? So if they do something that they're not supposed to do or that you don't want them to do, you're actually ready for that. That's a skill some have more so than others. It makes driving safer. In this sense, it makes trading safer as well. I have to have a trading plan. And if I go in with no plan, I don't know what I'm going to do. I don't know when I'm going to sell. I don't know when I'm going to buy. I don't know what my risk is. I don't know any of those pieces. Okay? That's a setup for some really bad trades because we end up not being very picky, and we want to be very picky. You say, Blair, picky means I'm going to pick, right? I'm going to pick, and I'm going to pick with prejudice. I'm going to pick with specifics in mind, but I don't know the specifics. That's what we teach you in our class, right? We're going to teach you the specifics of what to do and how to pick good trades. And we're going to teach you how to not trade based on emotions and news. And most amateurs, that is entirely what they trade on. I had a feeling, I had a thought, I saw an article, I heard on the news. I like the company, right? Remember, we're talking about trading too, not long-term investing. So we tend to see that happen, trading on news and emotions, no plan. And then they get in the trade. Maybe the trade works great, but they don't know where to sell it, right? That was not decided beforehand. The emotions kick in. Tell you, what do you not want to do with a stock typically when it's going up and looks like it's just going to keep going up? The last thing we want to do really is sell, right? But eventually stocks come back down. So if it goes up to $10 from $8, you don't want to sell it. Maybe it'll go to 11. And then it does go to 11. And then what do you not want to do? You don't want to sell it, right? But eventually it hits resistance and begins to sell. It was at 11. Now it's at 10.25. I don't want to sell it at 10.25. I was at 11. Okay, if it gets back to 11, then I'm going to sell it. And it goes back to 9.50. Oh man, 9.50. I was at 10.25. Okay, if it gets back to 10, I'm going to sell it. And then it goes down, and you see where this is going. I've seen it happen. No plan. So the market begins to do what the market does, and we get lost. We get tossed by a wave, like a wave in the sea, right? We just get tossed around. We have no objective plan. It becomes very emotional, right? We become paralyzed. We become greedy. We become fearful. All these things start to kick in. That is not a situation you and I want to be in. It's not a situation that protects our capital. That is not a great trade. That is not a good trade. Now, that might end up being a profitable trade. You might get out of that with some profit. You might not. You might take a loss. You might take a lot of profit. You might take a big loss. But if you keep trading like that, if I kept trading like that, in the end, it's going to blow up an account. Almost guaranteed. It's going to blow up an account. Okay? No plan. Got to have a plan in order to control those emotions. Okay? So that is a huge deal. We got to learn how to make a trading plan, and then we got to practice sticking to that trading plan because it's going to help navigate us. It's like a map. It's like a map in open waters. You can't control the wind, right? You can't control the wind. We've got to know where we are, where we're going. A plan helps us do that with our money, okay? So that's a huge one. Checking back on the comments here, making sure I'm not missing anybody. Number 2, all right? That's one way to avoid bad trades. And that is something that you and I have complete control over. Knowing how to do that, learning how to do that, and implementing that in every trade that you and I ever do is something that you and I have 100% control over at all times. We will never have control over a stock, but we will always have control over our ability to make a plan and to execute that plan. And again, learning in the program how to do that is so important because it helps us move from that mindset where we're tossed around to the mindset where we know what we're going to do, even though we don't know what the market is going to do. Even that right there, you guys, that is a total flip in perspective. That changes everything. If you just learn that one thing, man, we can avoid so many bad trades. And if we can avoid bad trades, we can protect that capital, right? We can protect that capital. And then think about this. If you and I only had a few winners, if we only had a few big winners, but we stayed out of a lot of bad trades, and we kept our losses that we did have really small, we're starting to get ahead, right? That is the potential if we execute it like that. So it's really, really exciting to learn these things because it could really change your financial future. This is practical stuff, right? We're not just talking theory. This could really grow a trading account. Again, it really does have the potential to do that. So, number 2, know your patterns and stick to them. We've done this on Market Monday. We have looked at patterns in the market. Part of what we teach in our system is for you and I to identify specific patterns. This is where we like to say that trading is more of an art than a science, right? It's more of an art than a science. It's actually something we learn to do visually. A lot of people think trading is going to be about economics. It's going to be about news. It's going to be about earnings reports. It's going to be about numbers and ratios and balance sheets and all this stuff that I don't ever use. I never use them. I never use any of the things I just talked about. Now, I look at the news a little bit. That would be one of the exceptions. But I don't trade on news, okay? I don't need to know any of that. Why? Because I know the system that we teach here at Tradeway. And that system is built on, in large part, looking at patterns. Looking at patterns in the price of a stock. What's a pattern, right? Really, just simply put, what's the definition of a pattern? A pattern is something that repeats over time. And it repeats until it doesn't. So if I could find a way to find patterns, then I could potentially, right? I could potentially make money off those patterns repeating over and over and over again. And this is what we teach in our Step 1 course. What patterns do we use? Now, we don't teach them all in that course, but we teach a lot of them, right? We teach patterns because that is the crux of how we can start to make buying and selling decisions. And for a lot of us, that's a revelation. Wait a second, you're telling me that you're using something that's just visual, right? It's just shapes on a screen, my laptop, which we're using right now, to make buying and selling decisions? I don't need to know all this crazy Wall Street stuff. No, you don't. You do not need to know that. What we need to know is what to look for. And we start with patterns. So avoiding bad trades is avoiding trades. Remember, I'm talking about trading and not investing, okay? We start by looking for a pattern. And if there is no pattern, then for me, there is no trade. Yeah, but I heard on the news that this stock was going to... Yeah, but Blair, I just really feel like this stock is going to go up. Okay, you might even be right? The news article may cause the stock to go up. The feeling you had, that maybe is right. But over time, consistently, right, something that's actually going to change your life, we've got to have a system. We've got to have higher probabilities, and we get that from patterns. And I can tell you, I work with students and I see a lot of times there will be a suggestion. Hey, Blair, I'm looking at this as a trade. What do you think? Or I just got into this. What do you think? This is more so true with the newer students. And I will say, first thing, what's the pattern? It's the pattern you're looking at, right? What's the pattern you're looking at? Is this a rolling stock pattern? What kind of pattern? And if they know what it is, then we can begin to talk through that. Maybe it's something I just didn't see. Maybe it's not a great example. They're learning. But a lot of the time, they just forgot. Oh, man, I made it more complicated than I had to. Did you hear that? That happens in trading. Making it more complicated than we have to. Oh, I should just stick to the pattern. Do I see it or do I not see it? If I don't see it, move on. Because if I try to force trades, right, not using a pattern, something simple that tells me where to buy and where to sell, it's visual, it's right there in front of me. All I have to do is memorize the pattern. Then I get into bad trades. I get into trades I don't need to get into. If there is no pattern, A chart will likely look like a random mess, right? And that two things come to mind if that's the case. Number one, the chart just might be a random mess. And if that's the case, I'll tell you what, I'm not putting my money into that stock. Doesn't matter what the tip says, doesn't matter what the Wall Street analyst put on the news, doesn't matter what any of the trading publications said, doesn't matter what my friend CNBC, doesn't matter. I'm not trading it. That's not going to be a good trade for me. Or the other thing that's possible is there's a pattern there I just haven't learned to see yet. So it looks random to me now. Some of you guys out there know what I'm talking about. You just say, well, I haven't learned any of these patterns yet. So you're talking about patterns, but I don't really know what you mean because I haven't learned them yet. So stock charts, right? Charts that show the price of the stock moving around on the screen, they do look random. Now, what I see, right, is still on the chart you're looking at. We just haven't trained you how to see it yet, right? So that's what we want to do, is get the random out of it, get the mess out of it, and help us start to see the opportunity that's in it. So sometimes there is just no pattern, right? No good pattern anyway. And sometimes we just haven't learned to see it yet. Either way, getting from a bad trade to a good trade is going, ooh, there's a nice, clear pattern on this chart. I'm going to show you an example before we finish up. It's essential that we don't waste our time, right? We don't want to waste our time. We don't want to waste our capital in trades that don't fit into these two important but not exhaustive rules, right? There's more I can show you on how to avoid bad trades, protect your capital. If we're afraid's a strong word, maybe afraid, but if we're concerned about risking our money in the market, right? That's normal. We should be. Professionals are concerned about protecting their capital. But let's couple that. Let's add to that the skills on how to know where to take good risk, right? Wise risk, calculated risk, so that we don't pass up on the opportunity that the stock market provides for us, right? I started on the very first Market Monday, very first one in 2020, talking about why do most traders fail in the stock market. Remember, we've had tens of millions of new traders, more than ever, coming into the stock market during COVID 2020. Why do most of them fail? Well, I'll tell you what, most of these statistics, the traders they've put in these statistics, they've gone and opened a brokerage account so they can buy and sell stocks. They put some money in there, but they're not traders in that they learned how to trade. They just had access to trading in the stock market. That's two very different things, right? So do most traders wash out in the first year? No. But people who have access to brokerage accounts but don't understand the skill set of trading at all, well, it's extremely unlikely and difficult for them because it's easy to get in bad trades. You now know two key fundamental ways that we can learn to avoid bad trades, getting into good trades. And I tell you what, guys, when you see this system, it's so simple. It's so simple. Is the value of something found in how complicated it is? Or is the value of something found in how powerful but simple it is? I'd rather make an investment in something that's powerful and simple than something that is necessarily complicated. Sometimes there's this idea that if something's going to be valuable, it's got to be deep and complicated and multifaceted. Simple, right? Following patterns, that's simple. Okay, now let me go ahead and show you one of these patterns. Let me go ahead and show you one of these patterns here. Because let's see. I want you guys to see what we've been doing here in the program. Now I've got to share this for you guys. I actually posted this particular pattern we're going to look at here. if I go to the screen, was on this day right here. Now I know that little, actually I can probably get this out of there. No, unfortunately I can't get rid of that blue marker there. This day here, okay? This day here, I let our students know and said, well, where is support and resistance? Where are these lines, right? I had drawn the lines on this day here, okay? So, and by the way, full disclosure, I do not have a position in this stock. I have not taken a position in this stock. I don't trade anything that I teach from, that I give to students, talk about with students. It's not something that I am allowed to do. It's not something I do. So you understand that there's no conflict of interest there. I do not trade them. But I help some students walk through this as an example. So it's coming down, but it's not at support. So I said, we've got some time before this gets down to support. Let's see if it moves down. Next day, it moves down. But what do we not see there? Well, we don't see it moving up yet. So we're going to teach you not just what to buy, but when to buy. The next day, the stock starts moving up. Now, how on earth did I know that? Because I have a crystal ball? No, I don't have a crystal ball. I understand how to use patterns. Next day, up. Next day, up. Stock goes from 111 to 114 respectively. It's now $3 a share. Anybody who did this trade, $3 a share, right? Like clockwork, the pattern worked, and it's going to work until it's not going to work. And that's the simplicity. Learning how to see the pattern and then learning, well, what on earth do I do with it in a way that benefits me? That's what we're going to help you know how to do. Okay? If you're not in one of the programs, you want to trade, I'm telling you, we exist to give you the confidence to get active in the markets. All right? We have monthly memberships that give you access to our programs. So you can go to tradeway.com. You can see our memberships. Come and join our Step 1 Start Your Journey class. 2-day class, less than $100. It is going to teach you how to trade in the stock market. It's going to teach you how to do what I just showed you, right? The potential of this stock, this kind of a movement, is to actually make money in the markets. And less than $100 to learn how to make money from your computer at home. Hey, now that's a trade I'll take any day. So head on over to tradeway.com. You can pull that up and you will be able to sign up, join the class. If you're not in a membership already, you're a little bit further along, maybe you've already taken the class, go ahead, think about joining one of those memberships because it's something that you're going to get the skills you need, go to the next level, teach you some of our other strategies here using options, super powerful thing. And it's month to month. You can come, you can join, you can do it for a month. Give us the opportunity to prove to you what we can do for you. And anytime you don't want to be in the program, you don't have to stick around. Simple as that. You get to say, I'm in when I want to be in. We hope you graduate our program. That's what we want. Now, we've got lots of stuff for people to do, but we hope you graduate the program. So that is something that is available to you guys. You can certainly do that. With that said, thanks so much for being on with me tonight, guys. I appreciate you, and I will see you next time. Good night.